Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, April 15th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone, and welcome to the new week of trading here. We have the ES trending higher. It has not stopped, continuing to go up here. Every pullback has been a buying opportunity throughout the year so far. And right now, we appear to be near a cycle high. We've continued to push higher within this kind of trending market here, and while we are holding above the 28.78 half, it's not by a whole lot just yet. We haven't reached the previous highs of the year there, 29.50 or so, and we're just above that zone, just continuing higher. What I mentioned before is we're coming back into the zone from last year before we sold off, and right here that's about 29.50. That's that high. Right here, that is 29.77 half, and that's the FOMC key level from last September before we sold off. And we bottomed out, and we're coming all the way back to that level to get it. So it's my belief here that we're going to continue higher until we hit that FOMC key level, which could be hit today. Perhaps we're averaging about 19 points per day on a 5 and 10-day basis. So from the current lows here, which are the lows at 19, or rather 29.09, that puts you at about 29.30 or so on an average range basis. So we could certainly hit this today if it really wanted to. And again, if we find some sort of near-term weakness up there, we may pull back just a little bit here, but any pullback has still been a buying opportunity. So this market remains strong. We have only just begun to get outside this narrow range here. And as I mentioned before, whenever you break out of this range here, you tend to see very nice expansion that follows. So we'll see how this continues to play out. But overall, we could be headed higher today toward that 29.27 half. And any pullback, even as deep as 28.80 or so, could still be a buying opportunity for a continuation higher over the course of the week. So say we pull back Monday, Tuesday, maybe even Wednesday, it could still be a buying opportunity for a full-on finish into the end of the week. All right, let's take a look now at the NQ. Very similar price action here, very bullish structure. You can see here this market has just been going up. You know, pullbacks bought, pullbacks bought, pullbacks bought, and now we're near a cycle high where if we do see another pullback, it could still be a buying opportunity. So again, as deep as 7,500, even 7,450 could still be a buying opportunity for a continuation. We haven't seen much of that action lately. This has been about as narrow a range as you'll get. We're at 67 points per day on a 10-day basis, 61 on a 5-day basis. We're at 18 right now, super narrow. It's just been very difficult to do anything intraday. There has been one morning pullback and a buy to the close type of thing, but really not a whole lot of action. If we do see one major move down, again, like this or like this, that could offer an opportunity to get in. For now, we're drifting higher until proven otherwise. So we'll continue to keep an eye on this one. If we look at crude oil, this one also pulling back right now within its current bullish trending structure here. So we've seen this pull back and go, this sideways pull back and go, and now we're seeing the same thing, kind of sideways pullback. Do we find a low and go? As long as price remains, say, above 62s here, any pullback as deep as that could still be a great buy. You can see this thing has honored the trigger zone this entire way. The trigger zone, which is the buy the dip type of zone, that's between the 8 period and 21 here in a bullish trending market. And so we're just seeing price get into that zone right now. And if we see any type of rejection like this or this or this, that could mean at least a one-day move up. And it could even mean the 1 to 5 day follow through. So we'll continue to watch this, but it's getting close to seeing another buy the dip opportunity. If there's a failure to hold, say, 62s for a prolonged period, perhaps we fall a little deeper. But right now we have not seen the market be able to maintain a downward trending type of profile for a while. We've seen either sideways and a quick pullback and go. So again, doesn't always last that way forever, but that's the current structure until proven otherwise. I would say a failure to hold 62s would prove otherwise. All right, let's take a look lastly at gold futures. Gold futures right now has developed a large rounded type of pattern. You can see right here, it's rounding off at the top. You got 1280 as resistance. This is typically very, very explosive, right? You have almost 4 full months. You have 3.5 months of compression, trading range behavior, and now rounded behavior. And that compression typically leads to explosive results. I would say from 1280, if we were to fail here, it would drop us all the way back to 1200. Easy. If we were to fail on a breakdown, I think we rally easily to 1360. So from this pivot, 1280, we're going to see a significant move once expansion occurs. Is it going to be through support down back toward 1200 to 1210? Or are we going to reject 1280 and start to break through 1320? If so, that opens up 1360 above. So this one's getting very, very close to getting that major move. We're still chopping around composite VPOC, 1287.60. And so naturally, you may see more compression there until we see that move. So again, this one could be very, very exciting pretty soon. If we were to break down, it could be an aggressive move down. If we hold it or reject this level pretty strongly, I think we head right back to the top of this range. So is it 1200 or is it 1360? This 1280 right now is going to give us a really, really good indication of which way we go. So continue to watch that level in gold. All right, that is it for now. We'll see how this plays out heading into the rest of the week. Good luck, trade well, and happy Monday.